guess we will get started. Okay, I think we'll get started here. First of all, I'm Pete Roland, and somebody asked me, are they going to get a test here? Because I do a lot of teaching, and I promise I won't give a test. And someone else said that, well, gee, I heard you were an easy grader anyway, so maybe I should give a test. Okay, if I can do this here. Complication. Chuck? Okay. This seminar is on financial literacy, and it's actually the first of hopefully many more seminars. This is a kickoff program for something that Canon Capital wants to do. Since 1986 is when we were formed, and our mission really is to help people with their financial wealth. We want to help grow it and protect it, whether it's their business, whether it's their investment properties, whether it's their portfolios. That's our mission and always has been. And part of that deals with financial literacy. We've always tried to help our clients understand what's going on. And so as much as we're consultants and we do various kinds of work, we're also trying to help our clients understand things and to teach them. And we live in a very complicated world, and the financial area is no exception. So we decided to start having seminars, but more importantly is we are going to have a more focused initiative on helping not just our clients understand financial things better, but hopefully family members of our clients, friends of our clients, and even more of the public at large, because we all have a vested interest in everybody understanding more and more. So I'm going to take a brief historical view of financial literacy. Then we're going to look at where we're at today in society. I'm going to talk a little bit about some of the tools, some of the resources you have available to improve your financial literacy. Now, we only have about 40 minutes here, so I can't go too deep in any one area. But hopefully, again, I can highlight some things that will spark your interest, and we can certainly pursue them further in the future here. So we'll spend some time on some basic tools and resources that you have available to you. We're going to also talk about the future, because part of our role here is to look ahead and see where things are going to go so that we can help our clients plan accordingly. And then we're going to talk about how we can help others through financial literacy. And finally, I'm going to wrap it up with a little bit about what Canon Capital is trying to do, and we really need everybody's help here to make things happen here. So what is financial literacy? And you can go to the formal definitions, and it's really two parts. There's literacy, which is traditionally understood as the ability to read and write. However, it's expanded quite a bit to include using images, data, all kinds of things to help us make decisions. I use this example. Many of you are familiar with Mrs. Fields cookies. You go in a mall and you walk down the corridor and you smell the cookies and you buy some cookies at their stand. And it seems like a pretty unsophisticated business. But do you know, first of all, it's not an easy business because you got to make these cookies and you need enough to meet demand by the customers. But if you have too many cookies, they go stale. So you have to make just the right amount of cookies in this business. And they do all kinds of forecasting and budgeting. And one of the things they actually bring into their decision making is the weather report to determine how many cookies they should make. Because they found out that the weather influences how many cookies people eat. So it's a non-financial piece of information to help them make a financial decision. That's how sophisticated we've gotten, where we have a little stand that uses all that kind of data just to make decisions. So literacy has been expanded way beyond numbers and letters, and financial management. There's a definition there in terms of the budgeting, saving, spending monetary resources. Again, it's basically growing your wealth and preserving your wealth and helping to use your wealth as a tool to accomplish other things in your life. If we look at a historical view, this isn't new, this idea of financial literacy. And just as the definition has been expanded to include more than just numbers and alphabet, if we go back about 5,000 to 8,000 years ago in ancient Mesopotamia, they actually had a system to track things, and they had their own form of financial literacy. And this is interesting because they didn't have an alphabet and they didn't have numbers. So they needed to construct a system to do what they do. I do some teaching in the MBA program at DeSales University, and I teach accounting and finance. And normally in my first accounting class, I'll get these business executives in there, and I'll kind of run them through an exercise based on this, where they have to construct an accounting system just with clay. Okay, that's it. And actually I use Play-Doh. So, and sometimes it baffles them because what do we do? But you know what? 8,000 years ago, people were doing this. And it's really interesting because they would use these tokens to represent other things. Back then, they did a lot of trading. Our village raised goats. Your village grows wheat. And we want to trade, and that's how we all survive. And so this system reflects that, and they would have tokens that would represent other things. And they would distinguish on the tokens features, things like, because there's a difference between a male goat and a female goat, and you don't want to trade for the wrong one. And so they would have a token to represent that. And, today we call that concept a derivative. You hear about all the derivative problems, and a derivative is just something that gets its value from something else. It represents something else. So they use tokens because it was a whole lot easier than the physical sheep or baskets of wheat. What was really interesting about their system here, though, was this thing here, and it's called a Bali. Bali is how it's pronounced. And what they would do is they would take these tokens and they would put them in this ball and bake the ball. And that way the ball traveled with the goods. So at the other side, they would break open the ball to get the data to represent what was happening. And, today we call that, I think, encryption. One of the biggest issues we have with the internet is protecting our data. And that's not new. They were doing it 8,000 years ago. And so if we look throughout history, a lot of the things we're facing today in our world, other people years ago faced the same thing. We just think it's new because it's packaged a little different. But here's a great example about how, quote, primitive people could solve some of the problems that we're still trying to address today here. So let's look at the status of financial literacy today in this country. I see people of lots of various ages, so we have different perspectives on life in terms of what we saw when we were kids versus what we see now. But it's kind of it's not a positive situation when we look at the status of financial literacy today. First of all, understand it is more complicated today than maybe 40 or 50 years ago. So it is more complicated. The economy is different. But just looking at some of the statistics, and this is a good one, actually, because I've seen worse statistics where they said about 57% of the adults in this country are financially literate, which means that 43% are not. And that's a big problem because we all live together. And we may feel that we're on top of our financial situation, or maybe we have good advisors that help us with our financial situation, but we're living in a world where 40% of the people or more don't have a clue about things. And we pay for that in different ways. 62% of Americans have less than $1,000 in their savings account. Okay, that's a staggering figure. 21% of Americans don't even have a savings account. This is the world we live in. This is the society we live in. Students entering college get a D in financial literacy. What I've noticed that in the high schools, up until about recently, they really didn't teach students a lot about practical personal finance, like how to balance a checkbook, how to live in today's world. I do see now more of a movement that we're trying to get programs into the school to help educate our children, so at least when they come out, they can function. Retirement, that's a big issue. And the average couple today, first of all, you know, we have health care, which is a huge expense. And so the average retiree is going to need about $240,000, $250,000, just to fund their health care and retirement. And the other part of this statistic in this study was that only 27% of retirees have more than $250,000. So only 27% of people who retire even have enough to fund their projected health care. So as a nation, we're not doing so good when it comes to financial literacy in terms of understanding how things work and how financial issues affect our life. And it's kind of, you know, we have to do something to turn this tide. Again, we might be part of that 53%, you know, but we're living with the other amount. Plus, we all know people that just are not good with financial things. And they might be very vulnerable. They might not be functioning well. So some of this, what I'm talking about today, isn't just for us. It's for us being able to help other people who need help. Incidentally, you can ask questions anytime you want. Okay? So feel free to ask questions. So we can always look to our leaders to help us, can't we? And, you know, since society itself is in shambles when it comes to financial literacy, we can look to our leadership. And I say that sarcastically because look at our leadership. I mean, look at our debt in this country. It's $19 trillion. You can go, there's a really neat little site called the Debt Clock, and it's continuously racking up the U.S. debt and all kinds of statistics. And we just keep going more and more into debt. I would say we're pretty irresponsible as a nation, as a government. And in some ways, that's reflected in society itself. I mean, if about half of us can't even understand financial things, we're also the half that vote on officials who run our government. You look at the state of Pennsylvania, you know, we still don't have a budget. We're like, what, 7-8 months overdue for a budget? And I talk to local nonprofit organizations and you know, who are living, they need these funds from the government. Everybody pays their taxes on time, I think, here. And yet our government can't even pass a budget on time. Now, if it was a business, those leaders wouldn't be there anymore if they can't even pass a budget. But again, another example of our leadership is not very good as well. And a lot of our leaders don't have a clue So we can't really look at our leadership to help us. We have to pull together ourselves. We need a lot of help. And again, that's part of what we want to introduce here. I only have about 40 minutes, so I can't teach you a lot, but hopefully I can inspire you to take action, and we're here to help you do that as well. So let's look at some tools and resources for us to improve our financial literacy, and also for other people we know and want to help, for them to improve their financial literacy. And I broke it into 3 categories of tools. One is the tools and processes for making decisions. We make decisions all the time. We make financial decisions all the time. Sometimes we don't really think about it. We make them subconsciously. And I think it's in everybody's interest to learn how to make better financial decisions. It takes practice, because in many cases we're fighting human emotions. One of the things we do here in wealth management is when we develop somebody's portfolio and we come up with what we feel is the best allocation of your investments to different asset classes, we will rebalance back to that investment policy statement that we produced for everybody here. As that's our formality in our process. Because without that, what happens, particularly with individuals, is we let human emotions take over our decisions. And we know how that works. So you look at the stock market as an example, and we all know the stock market is somewhat volatile. It goes up, it goes down, it goes up, it goes down. Over long periods of time, we get decent returns from it. But it's real easy to focus on those very short periods of time and sometimes overreact because of our human behavior characteristics. So as an example, the market goes down 40%. Nobody's happy with that. And some people feel like it's time to sell, because the market went down. And historically, that's not the time to sell. Likewise, the market goes up 40%. Well, now at least everybody's happy, but many people are thinking, I'm going to put more in that because it did so well. And again, historically, that's the wrong thing to do. But our human emotions take over, and then we don't make rational decisions. So again, part of developing processes is to take emotion out of those decisions. Has anybody ever, they did something spur of the moment, they spent money, and then afterwards they said, gee, why did I spend money on that? But at the time, it seems, you don't even think, you just do it. What happens all the time to us? Because, again, we're not stepping back and evaluating the financial aspects of that decision. And I'm not saying you're going to do all kinds of calculations and Excel spreadsheets for a very minor decision, but at least think a little more about them. And when you come to those big decisions, maybe even go through a little more work to help you make a better decision. I mean, people spend more effort on what clothes they're going to wear today, or than they do, what am I going to do today to help my financial situation here. So there's some tools and processes, and I could teach hours and hours of that kind of stuff, because I do that with the people in the MBA program, is teach them that kind of stuff. There's some terminology that we should really learn and know, and that's a constant effort because terminology changes. They keep coming up with new phrases, new concepts, new words. Sometimes they come up with new words for the same thing. understand that certainly the investment world, we have Wall Street and the brokerage firms, and we have, it's very controlled, the marketplace, in terms of what we see and hear when it comes to investment. So we have to know what they're really doing so we don't get misled. And then finally, I'll talk about some resources and education help that you can get. And before I even get there, understand that here at Canon Capital, we're always here to help you. So if you ever have any needs or questions, talk to your advisor or person that you're most comfortable with, and we can at least probably guide you to a right place to learn more here. Okay, so when I talk about developing a process for making financial decisions, this is just one way to do it, and it illustrates how you methodically go through these sort of things. And it always starts with goals and objectives. Well, what do you want to do? What's important to you? You know, you talk to a young person sometimes, and you might say, what do you want to do when you grow up? And they shrug their shoulders and say, I don't know. And they might not know, because it's a complicated decision. But many times, because they do not know, they don't do anything. And so it's important to have goals and objectives. It's important to know, and this is a very personal thing. As advisors, we can help people formulate and come up with their goals and objectives, but we can't tell you what your goals and objectives are, because that's a real personal thing. So that's always where you start. Then you evaluate, because I'm talking about personal finance here, is internal things. Is my situation, what are my needs, maybe the needs of me and my family, you know, what's my individual situation. Then you evaluate the external, whatever data you can get and information in the environment, and then you simplify. You try to simplify your decision making. And this is really important today because we have too much information. We have too much data. How many of you do emails, okay? And every day you get, like, you know, you spend a lot of time getting rid of all the email that are junk email. You're bombarded with information. You turn on the TV, you're bombarded with information. You use the internet, and you have unlimited information. And so one of the skills that everybody needs to develop is a way to weed all that stuff down to just the information that's important to make the decision. Otherwise, we're wasting our time, we're getting distracted, and ultimately we're not going to make the best decision that we could do. So simplifying all this through a structure and a process is important. And again, the formality keeps us in check so our human emotions don't take over and cause us to make bad decisions. Then we select the best alternative, understanding the relationships and impact on other areas, because everything seems to be interrelated. So if you make a decision to do this, it affects something over here. So you make a decision to, maybe a good decision, to contribute to your retirement plan where you work, to help save for your retirement. That's a good decision, but of course it's going to impact your paycheck and cash flow over here, so you have to factor that in. And that's the way most financial decisions work as well. So you got to be aware of the bigger picture in your decisions here. Then when you select the best alternative, you monitor it and adjust it, and it's an ongoing cycle. Another thing sometimes we do is that we make a decision and we forget about it. We're like, wow, I'm glad that decision's over. Now I don't have to think about it anymore. And yet maybe it's the kind of thing we really should be monitoring what happened based on the decision we made. And so we see these things in our personal finance. Here's an example of a structure for decision making, and this example has to do with the main areas of what we call personal financial planning. So you want to get your personal finances in order, and it almost seems like it's a huge task. It's where do you even start? And that's not good, because if you're like me, when I have that kind of task, when I look at my garage and I have to clean it, and I look at it and I say, I don't even know where to start, guess what happens? I don't start at all, okay? I find any other excuse not to clean my garage. So it's good to structure things, and it makes these decisions easier. So when we're looking at our personal life and our financial life, we might want to break it into common categories such as this, okay? Cash flow planning, the ins and outs of money in our life. Because, we can be very wealthy, but if we can't pay our bills, we're not very happy, okay? Or I'll see businesses, actually I'll see individuals that on paper, they're really wealthy, but they don't feel wealthy because they don't have any money. They can't pay their bills. They feel poor. And then you can see the other situation where somebody, just because they have cash in their checking account, they think they're rich. And they think they can spend it. And they're not realizing that they're not building any long-term wealth. So cash flow planning is very important. Risk management is very important. That's protecting your yourself and your wealth. We sometimes think of insurance as a way to protect against risk. And I'm not an insurance salesperson, but you insure your car, you insure your health, you insure your house, you insure lots of your life, because and you do want to look at those things, but there's also other ways you can lower risk. So, for example, I guess I do. I have life insurance because I have children and a wife and so forth. But maybe I'd also eat better so I live longer. Instead of just buying insurance to solve the problem, maybe I should change my lifestyle. Or maybe if I'm worried about my house burning down because the garage is really full of stuff here, maybe I ought to clean my garage so I don't have a fire, so I don't, have that risk in the first place. So insurance is easy. If you have the money, insurance is an easy solution, but it's not the total solution. Retirement planning. We do a lot of retirement planning here. We also work with a lot of organizations' retirement plans, 401k plans, 403b plans, and we help them set up good plans and run those plans and so forth. For a lot of people, that's the only retirement they have in terms of savings, because it's something that, it's out of their paycheck, they don't see it, and they build it up over a long period of time, and, thank goodness, because they wouldn't be able to retire. Investment planning, we do that here as far as investment advisory, and we work with people and find their risk tolerance and come up with the best solution we feel for that, for their goals and objectives. Estate planning, what happens, and that's not just when you die, what happens. It's also what happens if I become incapacitated and somebody has to step in my shoes and help and pay my bills for me and that sort of thing. And those things are easy just not to think about. Okay, elder planning. There's a lot of issues there. With care, and I just mentioned that health care, is $240,000 as an average, so we need to fund that when you retire. Many of us have gone through, right now I'm going through with my wife's parents, they're having a lot of health issues, and so what do? They want to live at home, but my father-in-law really can't, and there's a lot of issues there, a lot of emotions there, and that's another thing with financial decisions is if you can, because of the emotional side, everyone's so emotional, I'm not sure they're making a good financial decision. So whenever you can, and I know that's not easy, is you have to separate the two. And charitable planning, it's great to give back, but you know, you can do it a right way and a wrong way. You can, for example, donate to charities that you feel are worthwhile, but maybe there's better ways to do it to save more taxes, as an example. And you can choose, do you want to give that extra savings to the charity, or, you know, keep it, or in any case, you're ahead. And maybe even do some due diligence on where your money is going. So, you know, I still remember incidences where, it was many years ago, and I had a client who was going to donate a substantial amount of money to a charity, and it was because they got literature that was, I mean, you saw starving children, is very emotional, and she felt very attached to that cause. And then we looked at their financial situation, and something like 20 cents of every dollar actually went to help feed those children. So it was a very inefficient charity. And there was a lot of other better charities that would maybe use her donations better. So there's a lot you can do with charitable planning, educational planning, and that's not just for children to go to college, because one of the things, I am an educator, so understand that I'm a little bit biased, but everybody should be learning all the time. And it doesn't matter what age, it's what keeps us alive, it's what keeps us going. So there's funding for that tax planning. Of course, you know, we get hit with taxes, all kinds of taxes, income taxes, and sales taxes, and estate taxes, and franchise taxes, and you know, the government takes a lot of our money. And again, that's very disturbing because they're taking a lot of our money, or I should say we're giving them a lot of our money because we all voluntarily pay our taxes, and they can't even pass a budget. Think of that. You know, would you lend money or give money to a business that is so incompetent they can't even pass a budget? Now, again, we have no choice, okay? But, you know, it's not just, for some people, it's not just tax planning so I can keep more of my wealth. It's because I don't like what they're doing with my money. I think I could do a better job, maybe by donating some of that to local charities that actually accomplish more with the dollars that they're getting. So there's all kinds of planning. But this is an example, and I spent a little more time on this because this is personal financial planning, which I know everybody here, this is relevant to you, you know, looking at your life. Advisor who knows the tax laws, that's one half of what needs to be known. The other half is your situation, your goals. You know, you have to communicate with them so they know how to use those tax laws to your advantage. It's kind of like going to the doctor and walking in and expecting them to find everything. Well, no, you got to tell them. You got to say this hurts and that hurts and direct them, because they don't know, you know, unless they run all kinds of tests there with that. And my father was a doctor, and that's what he used to say. He said, you know, when you go in, you got to tell the doctor everything you feel, because that's the only way they're going to really know. And so it's the same thing with any kind of financial advisor, or anything, you know, your car, when it breaks down, you take it to the mechanic, you tell it what you think is wrong with it, and then they can concentrate on that and fix it. So, you know, so anyway, the tax planning process, you got to understand the marginal tax rate. Do you know what the marginal tax rate is, or what that concept is? That's a term. You know, we all pay taxes. We all pay a lot of taxes over our lifetime. And a lot of people, they don't even know what tax rate they're paying at. What we try to do is, you know, you can just look at an average tax rate. So I make, you know, if I make $10,000 and pay $1,000 in tax, that's a 10% average tax rate I'm paying on that. But the important rate for tax planning is what's called the marginal tax rate. It's the rate of tax you're going to pay on that next dollar of income you get, or it's the rate of tax that you're going to save on the next dollar of deduction. And that's different than that average rate because our tax system is it's what they call progressive. So the more money you make, the higher rate of tax you generally pay. So you got to know where you're at first, and then you look at the alternatives and you rank them, and then you implement and then you monitor. And again, it's a process we go through, whether it's formal on paper or some spreadsheet or mentally here. We have to understand relationships, as I mentioned here. So here's an example of, and it applies to both individuals and organizations, where we have three primary financial statements. We have a balance sheet, which you might think of as a personal net worth statement. Maybe you had to do one of those for the bank sometime, or I encourage everybody to periodically make your own net worth statement to see where everything is, see what you have, be able to compare to other years. Maybe a lot of us have spouses or children that if something were to happen to us, we would want them to have some kind of clue about what's going on. So this is good stuff to do. But we have a balance sheet. We have an income statement, which for a business, it's your revenue minus your expenses. For an individual, it's, same thing. It's your revenue, your income minus your expenses, and what you have left is your income. And we have a cash flow statement, which is cash in and cash out, which is different than an income statement. And a lot of people and businesses don't understand that. They say, well, I get this W-2 form that says I get all this money. But again, cash flow is not working. Or else you can be a business and have a great income statement, financial income statement that maybe you work with a bank and they want to make sure that you're producing income. You show them that and looks good, but you don't have any cash. And cash, if you don't have cash when you're running a business, it doesn't matter how much income you're making on your income statement because you can't pay your bills. And if you can't pay your bills, your vendors won't supply you, employees. How many of us, if you're still working for somebody, how long would you work if they couldn't pay you? If they said, can't pay you this pay, maybe next pay. Well, maybe some of us would ride along for a little bit, but eventually, we need to get paid. And so cash flow is very different from income. And that's why we have these three primary statements. In fact, I like to look at them as a way to describe a business or an individual in terms of what's happening. Remember I talked about a derivative? Well, financial statements like this are a derivative because they represent something else. Financial statements for a business represent what's happening in a business or organization every single day. Or for an individual, it's kind of putting those different pieces together for your financial life. So again, understanding the relationships between different aspects of your finances is very important. And each one of those tells us a different thing. And it's kind of like a doctor. You go to the doctor, and in fact, one of the criticisms I hear of medicine is you go to all these specialists, and they're really good at their thing, but nobody's putting it all together. And you have to put it all together. No matter how good everybody is at their specialty, you need somebody to coordinate it so so first of all, they know what each other is doing, and you get the best care. Financial terminology, and there's lots of different terms, and I'm not going to go through them all, but we have to learn some of these things like inflation and deflation, leverage and risk, fiduciary. Fiduciary I'll talk about because that's what we are here. A fiduciary is somebody that has a legal obligation to do the best thing for you. And in the investment world, what that means, because there's a lot of investment people out there. and there's brokerage people, and there's fiduciary people, and a fiduciary has to do, by law, the best thing for you, where a brokerage person only has to do, they have a standard of just suitability, that they have to put you in something that's suitable, but not necessarily the best thing. Now, there's lots of really good brokers, and there's also some not so good investment advisors. So, but at least they're different standards. And so when you see fiduciary, that's important. For people who run businesses and have retirement plans, they're fiduciaries to their retirement plan, which means they're fiduciaries to all those employees who are in the plan, and they have to do the best thing for them instead of what maybe they think is good for the company. So that's an area there. Okay. So we have lots of resources. We have books, publications, newsletters. I got to point that out because that's a book, and Sue's name is on that book. It's one of the things that we do is a lot with retirement plans, and so this is a book. It's an ebook right now. It comes out in print copy in about a week or two. So that's my advertisement. But what we're and actually the Roger Levy, my co-author, is kind of famous. He wrote the amicus brief in the famous landmark Supreme Court case last year, Tibble versus Edison, which is all about retirement plans and fees. And the idea is that the people, the officers of the company, are fiduciaries, and they're responsible for keeping fees low and monitoring them, and they can go back many years to look at that sort of thing. And there will be a lot. Already you see class action lawsuits of people who get to retirement and they don't have enough to retire, and they're pointing to their 401k plan and say, hey, you know, those options I had in my plan weren't that good. They were high in fees. And so I've lost a lot of money because of your actions. And not just me, but everybody in the plan, all the employees in the company, for lots of years. And they say that's going to be a huge basket that the attorneys will go after. What we're trying to do in this book, incidentally, is this is geared more towards the employees, of learn what should be happening in your retirement plan and put a little pressure on your employers to make sure that that's put into place. Communicate with them and cooperate with them. And we think that's a lot better way to get a better result for everybody than through the court system and litigation. Anyway, but there's lots of books out there on anything you want, e-books, audiobooks, physical books. Here's some websites for you. We are a CPA firm here, so we're very connected with the American Institute of Certified Public Accountants, that's the AICPA, and they have great resources, and they're very user-friendly. So you go to their website, and whatever stage of life you're in, whatever issues you face, you can get a lot of information. Again, in today's world, information, there's too much of it, so it's easy to get. You know, the trick is bringing it down to, simplifying it so you can make a good decision here. So I listed some of those, what I feel are pretty good websites, and there's a lot out there. And again, we can help you. If you have a specific issue, we can lead you to a lot of resources that will help you. There's even some things, again, if I had more time, I would show you these for that are kind of funny and easy to digest. There's things for children. So if you want to educate children, because remember, part of our goal is not just ourselves to become more financially literate, is we want to help our family, we want to help friends, we want to help people we know. So start them young. And there's great interactive games and fun kind of things. So these are some pretty good sources. If you want to go to even more elaborate means to get educated, there's free college courses you can take on financial topics. You can take one, there's a great, this Coursera organization offers free college courses from so many colleges and universities all around the world. And they're top rate and they're free. Some of them, I just listed one or two. You can take a personal and family financial planning course at the University of Florida online. It's like a real college course, and you learn a lot. What I'm talking about today is probably 8 weeks or 12 weeks at 5 hours a week, and it can get pretty intense. Or even the Wharton School, University of Pennsylvania, has a business foundation certificate where it's basically free. And you know what a tuition costs at Wharton if you were to pay for a course is pretty expensive. So there's so much out there for us. And again, that's what I want to drive home to everybody, is it's there. We just have to take the initiative. So what does the future hold in terms of the financial literacy in our world? Well, unfortunately, we believe things are even going to get more volatile. We've seen, if you're in the investment markets and you see those accounts, I mean, we're almost getting a little used to the big ups and the big downs. That will continue because the world is moving faster and faster, and there's a lot of issues, a lot of change. I mean, look at the change that's happened in our lifetimes, okay? That will continue, and it'll continue even faster. Things get more complex, challenges, lots of things that are going to require us to become more financial literate than ever here. Now, again, you do have us. I mean, this is our job, so we take this very seriously, and we learn all the time, and you have us as a resource. But we also encourage you to learn as much as you can as well. You and everybody you know. And so, I mean, we have issues like negative interest rates. You might have heard that concept in the news lately. What's that all about? Because we've never really had that before. Well, negative interest rates are just that. Is instead of making money on your money, you'll lose money on your money. And let me give you an example, because right now, I just read an article about a third of the world's debt is in countries that have negative interest rates. And what does that mean? I'll give you a good example. The Japanese government just issued 10-year bonds. Now, when you get a bond from a government, it's usually considered pretty safe. And the way it works is you give them like 10,000 yen today, and in 10 years, they'll give you 943 yen back. They give you less back than you gave them to begin with at the beginning of 10 years. That's what negative interest rates are about. And quite honestly, the whole financial world, we're like scratching our head because we've never really had that before. How's that going to impact our people who retire and are living off of their capital? You know, it's a lot of them are not that happy as it is that interest rates are kind of so low and they can't get any yield. Well, now we may be in a situation where we're working really hard just to keep what you have. It sounds like a fantasy, doesn't it? But
no, it sounds like a nightmare, Peter.
Well, yes, a nightmare. It is a nightmare. And again, to me, it comes back to this whole idea of financial literacy in our leaders and the world leaders. It's not just the United States that's out of control. It's a lot of the world is out of control. And you're right, it is a nightmare. And so how are we going to deal with this? And this is just one kind of new concept out there, negative interest rates. We have this thing called fintech, where you're merging financial stuff with technology. We all know how technology has changed our lives. Well, now merging it with financial, and this is going to change. We're going to see changes in our daily life from this, I would believe. So it's going to affect everybody, and things like digital currencies. Okay, digital currency, Bitcoin, BitGold. They're not even, it's so new to everybody. Now, I will say, okay, and this is a great testament to learning. So, Roger, you all know Roger Small over there, a lot of you. And Roger's now in he has a master's degree from Harvard, some little school, Harvard. I don't know where that is and what that is. But he has an MBA from Harvard. But he's back for his second master's degree in digital currencies, from the University of Nicosia in Cyprus, which is some island in the middle of the Mediterranean. And it's a whole degree in digital currencies, okay? So, I mean, this is what we're trying to do here to keep up with the future. Again, it's another testament for you can learn it. I mean, Roger's almost as old as me, and he's still learning like that. So, you know, we're kind of excited for that. But it's changing. Ask him about blockchain technology, okay? And you'll perk him up here. But, you know, why do we do this? Because this stuff is going to affect our lives here. We have cashless societies. You know what this is right here? Does anyone recognize this?
Monopoly.
Monopoly. I used to play it all the time as a kid. We love Monopoly. It's been around forever. Well, you know what? It's missing one thing. It's missing cash. I'll pass these around so that, you know, you feel like you're getting something from the seminar. I'm giving out cash, okay? Like Monopoly money. Don't try to spend it. But look at this game. Monopoly now, the new games, they don't have cash. You know, they're conditioning us, the kids and us, to live in a world without cash. Some of the European countries are in the process of basically banning cash. So think about how that's going to affect your everyday life. This is part of financial literacy, what's happening here with that. So there's a lot of other things that are probably going to come down the pipe. So how can we help others here? You know, because that's what a lot of this is about. Well, first of all, you need to become a little more financially literate. We can't help someone else if we don't really understand things ourselves. So a little more of your effort to learn would go a long way. If nothing else, you can direct them to, you know, right sources, and that's good. That's good. I use this example of doctors. So, you know, I teach, and right now I'm teaching an MBA course at Lehigh Valley Hospital. And my class is doctors and surgeons and medical kind of people, and I'm teaching them accounting. Now, isn't that scary in a way? I'm teaching them accounting, you know, the surgeons, the doctors. But, you know, they need to know it to do their job. And they need to know it not because they're thinking, I need to know it so I can manage my personal wealth. No, they're all, from what I gather, they're all really dedicated people, and they want to provide the best care they can to you, the patient. And to do that, now they have to learn accounting so they can navigate the system and maybe get the best machine out there for you, you know, because they have to justify the budgets and all this other stuff to give you good care. And that's a really good example of how whatever you're doing, you need some degree of financial literacy to do your role well. And so I use that as an example. And again, you know, we all want to help our family and friends. And a lot of times we kind of step in after the problem happens. Anyone ever have to do that? I have 4 children, you know, so I know how this works. And it's like, well, there's a problem, and then you try to help them. And there's this thing called preventive care. Like, if we could teach them better, we might not have as many problems. So it's in your interest to help others, because then the problems won't be as big. But more importantly is you're going to help them, whether they're family members, whether they're friends, they might be children, they might be your parents. We see it all around us here. So again, we need to then help others. And society as a whole, I'm worried about that almost half the people out there aren't financial literate, because that's going to hurt all of us who are. And so what we're talking about here is, you know, join with us to maybe make a difference and create more financial literacy out there. And yeah, we're not that large of a firm, we're not that large of a community, we're not, you know, but you can make those kinds of excuses all day long. I think what we got to look at is we can all do something, and if we can spark some change, it's going to go a long way here. So we've come up with this financial literacy initiative, and so some of the things we're going to do is we're going to start having these kinds of meetings seminars, events, whatever you want to call them. We're going to talk about topics we think are relevant. Today it's kind of kicking off this financial literacy initiative. But down the road, you'll see them on different areas. Maybe Roger will do one on digital currencies for us, as an example, as they become more pertinent to our lives. The other thing is we're looking for feedback. What's important to you in your life, and we can maybe produce something to help you. Remember my analogy with a doctor is you got to sometimes tell a doctor what hurts so they can help you. So, you know, we're looking for your feedback here, whether it's on the sheets we gave you for evaluation, or you want to just talk to us or email us or whatever. Let us know, because then we can react. Also, we're available to do seminars tailored to specific audiences or focusing on specific topics. So now, if you know of groups or you know people that are important to you that might benefit from a little bit of education, as an example, let us know, and we'll do something for them. Okay. So again, you know, we're trying to really open up the communication. We're also trying to partner with everybody here to help accomplish the financial literacy improvement there. You know, we can work with we work with a lot of companies in their 401k and 403b plans, and some people might be in a company, they might be, you know, they might own a company, they might be officers of the company, you might be employees in a plan. You know, for many years we've always tried to help employers improve their retirement plans, and it's really hard because they don't want to listen to anybody. And so actually that's why Roger Levy and myself took this approach of what we got to do is create awareness among all those employees that this really affects, and they can help stimulate the change that needs to happen. We can have one-on-one interaction with our staff. Again, we're here, and we'll do more articles and books and that sort of thing. So we're going to do that, but we really need your feedback, because we want to partner with you on this. So we're only, you know, we're a firm, and we got, you know, good people here, great people here, but we're limited as to our scope of influence. And you know people who need improvement in financial literacy, and we want to partner and help everybody we can. We're not going to be able to make everyone out there 100% financial literate, but we can make improvement, and that's going to help everybody's life here. So that's what we're kicking off today, and we're looking for suggestions, we're looking for partners, we're looking for anything out there to help this happen. And so that's really what financial literacy is about. That's what this session is about. Hopefully, I sparked some ideas for you. Maybe there's some questions you have now in your mind. Maybe you're thinking a little differently. Remember, we're all here for you too. We don't want to all just leave, and because this happens a lot. This happens to me. I'll go to a tax seminar or something, and I get all this great knowledge, and I'm all pumped up to go, do all this stuff, and then I come back to the office, and I'm in the grind of work, and I forget this stuff, and then it doesn't happen. Okay, or, I just had this thought, well, I really ought to clean my garage. Okay, I'm kind of enthused to do it now, but probably when I get home or this weekend when I'm looking at my garage, I'm going to find something else to do. And this happens to us. So we need to keep this momentum going here. And again, I'd encourage everybody's input here and feedback to make that happen. And there's probably a lot of things we're not even thinking about. So with that, I'm doing pretty good on my time. We do have some refreshments, and I'll take any kind of questions or discussion too, as well. And the test, they're going to pass out the test for you to take and the quiz. And I'm only kidding. I joke a lot. So,
I have a question.
Yes.
These negative interest rates, are are there people in those countries that are actually buying government, bonds?
Well, I'll give you the example of Japan. Because, first of all, if you have wealth, what do you do with it? And there are some people that are buying it because they don't know what else to do with their money. I will also tell you, in Japan, I read an article, and the demand for personal safes is through the roof. Okay, which tells me a lot of those people are saying, well, I'm not gonna give the government or the banks my money to earn negative interest. I'll keep it myself, and at least I keep it. Kind of the put it under the mattress theory, but I'll at least put it in a personal safe. Or they may look for other alternatives. These are things, here we're talking about this a lot because, we help people invest their wealth. And so where do you put your money to deal with this potential situation of negative interest rates? They're not here in this country yet, although interesting, time ago when our Fed chairman testified, she mentioned that. That's the first time I ever even heard her mention negative interest rates. Mm-hmm. So that's a good question. Is what's that going to do to everyone's behavior? And we don't really have history to guide us because we've not really ever had negative interest rates before.
You mentioned you're a fiduciary, and that's a comfort to us versus somebody that's a broker. But how do we know that you're performing well as a fiduciary?
That's a good question too, because somebody can sincerely try to do the best job they can for you, but they might not be competent. You want to always monitor results. What we try to do is, and you'll see this with normally, if you're an investment client here, you get an investment policy statement with a projected rate of return over a period of time. That's kind of our benchmark, an independent benchmark, and then you see, every quarter how we do compared to that long-term benchmark. So what we do is try to make it very transparent and clear. So you can make that decision. A lot of, especially in the investment world, sometimes it's hard to get straight information. How are you doing? What are the fees? We are very straightforward about that. That's how we handle that here.
But is there an organization that assesses you, your performance as a fiduciary?
Actually, there is. You might notice on some of the things where we get independently audited by an organization called CFEX. They're an international organization, and they come into investment advisors. They'll go into large foundations, some large retirement plans, and they look at those people who are making the decisions regarding managing money, and do they have a good process? Are they following all the fiduciary standards? And we do that every year, and we get a certification report that we're doing all those right things. And we've been getting certified by CFEX for about 10 years there as an independent, organization. So that's one check, on what we do. I mean, we have the regulatory bodies. We have the Securities Exchange Commission, the Department of Labor, and those sort of things too. But quite honestly, sometimes I think they're more concerned with their own rules and regulations than they are the idea of doing a good job for, whoever we're serving. But we have layers and layers of regulation. We just had a compliance meeting, which Roger is in charge of, before this session here. Okay, I'm going to formally will break. I'll stick around, and we have everyone from Canon Capital stand up. We'll do that. I'll put them on the spot. So if you have any questions, and get to know them too, because we're really looking to do something with this financial literacy initiative. Even if we do a little, it can make a significant difference. So, that's what we're here for. And I want to thank everyone for coming out here. We do plan to do more of these, so we're looking for input on, do you like these? Do you want to see us do something else or different topics? This will be an ongoing part of our financial literacy initiative. Thank you very much, everybody.
Thank you.
If you guys have a contact information there, we might follow up as well. Might follow up with some suggestions. Maybe send an email, ask for suggestions for future seminars. So if you haven't done so.
And take the monopoly money. It might be worth something someday because it's not going to be around much longer.
So Peter, so on the negative rate, is that basically the assumption that it would be better to get a negative rate that you know than a deflationary rate?
Yeah, I think so, exactly, because you're getting surety. You're getting clearance.
Yeah.
And when things seem all over the place, investors are willing to trade off return for security. We actually had negative interest rates very briefly in this country, negative treasuries. In 2008, remember when things were kind of crazy and they were just a little bit negative because people were so scared of everything